Good morning, everybody, or good afternoon, or good night, depending on where you are. And we are really the part of huge international community. I don't know where I am, sun is shining, and money is being made every minute that we are using cubic tech technology. Again, I'm Dr. Leon Rebelsky. As I mentioned already, I'm not a medical doctor. I have PhD in physics and with very strong background in mathematics, and that helped me to understand and work out my own approach to the cryptocurrency and any kind of market trading. And that is, I'm going to share with you over the course of our meetings here, on the webinars, on the meetings, let's call them that way, organized by cubic tech technology. No, at the present day and age, there is basically only one possibility to make real money, and that is trading in the market. Unless you have your own well, you are not going to get rich anytime fast. And so what's left for all of us who don't have their own well, all our own oil well, is to trade in the markets. And with new technology that cubic tech offers you, the quantum technology, now is really the best time to do anything of that sort. We're going to, over the course, as I said, over the course of our meetings, we're going through different strategies of trading in the crypto world. But we will start every meeting with a short look, very brief look at what's going on in the crypto world. And it would be totally incorrect to have a say about what's going on, to talk about cryptocurrency, trading in cryptocurrency, or saving or investing without mentioning what's going on right now as we speak. Know this proverbial expression, to the moon. This is what is happening right now. Bitcoin is almost at its highest ever level. And many people, I mean, you know, this slide, I made this slide 2 days ago. 2 days ago, it touched 17K, and I was really excited about it. But it was Tuesday, today is Thursday. So where is it now? Let's have a look at this slide. Right now, it's already at 17,800, and it touched 18,000. So this is, we're going to live with this. And I personally sure this is going to happen very fast. Bitcoin is really becoming, not only Bitcoin, the cryptocurrency, all of it, becoming the part of our life, the slice of life that you cannot change. One thing that I have to mention, Bitcoin has always been like an engine of moving up all other cryptocurrencies, like Ethereum, like all altcoins. This time it didn't happen. I think people, the world is waiting what Bitcoin is going to do. And that is why I think altcoins did not go up as fast as Bitcoin did, but just give it time. I mean, I'm sure it's going to happen very soon. Now, what makes Bitcoin so good? Let's ask this. First of all, it's what makes Bitcoin so good? First of all, Bitcoin is what I would say it's a real money. It has all signs of being money, of being real money. And hold on just 1 second, please. I have several input information channels, information input channels, so I have to answer to some of them. Anyway, what makes Bitcoin real money? First of all, it's real. First of all, it's scarce. I mean, like gold or like fiat currencies that are being printed by the governments. I mean, there is a limit on what there is in the world of this currency. Like Bitcoin is only the maximum amount of coins that is going to be printed. It's going to be mined is 21 million. We are on a level of 17 million approximately by now. So it means that we are going to be at the level of finish line of all of it in a couple of years. And that, of course, will make Bitcoin a lot more valuable and expensive than it is now. Now, Bitcoin is durable. What does it mean? It means that it's made by blockchain protocol. You cannot change it. I mean, like you cannot turn gold into lead, and you cannot. Unfortunately, you can, powder gold and throw it over the Mediterranean or Atlantic, but you cannot do that with Bitcoin. Bitcoin is created, and that's it. Nothing is going to happen to it. It could be lost. It could be. I know people. There are many people. Hold on, just 1 second. Let me do a small technical thing. One second. The moderator says that you don't see my screen. Let me make sure that you do. Hold on 1 second. Oh, I think you still don't see it. It's a small technical. Oh, okay, here we go. Oh, it says here that I have it, but you don't see it. Okay, here we go. Here we go. Okay, great. Okay, so where was I? Okay, so Bitcoin is like a real asset, real financial asset. It has all qualities of a real asset, except for maybe one. It's not being acceptable as payment tool yet. But we will talk a little bit about it a bit later. So as I said, it's scarce. There isn't enough. The number of Bitcoins is limited. It's durable because blockchain protocol is supporting it. It's accessible. I mean, you can reach it 24 hours a day, 7 days a week. I mean, it doesn't turn off for Christmas or Thanksgiving or Rosh Hashanah. It's always there. Now, it's divisible. Like you can divide $1 million into dollar bills. Same here. You can divide one Bitcoin in let's say 1 million Satoshis, and then of course you can divide Satoshis as well. This is going to happen soon. Most important, it's censorship resistant. No one can influence it. No one can do anything to the, no one can stop it, okay? No one can regulate it, even though most governments are trying to do that. It's not going to happen, I hope, anytime soon, if at all. So, and of course, all these qualities make it a great store of value. I mean, you can store assets, you can store your wealth, you can store anything financial in Bitcoin. Still, there is one drawback yet, and again, as I said, we're going to talk about it in a few minutes. So what can the conclusions we can make? When it reaches critical mass of acceptance as store of value, Bitcoin will have huge potential to grow into a global reserve currency. And that will be the only reserve currency basically accessible to most people. Let's have a look at really what happened in the last few days. We have my own MT4. I'm sure people who are in Forex and in stock market know what it is. This is my MT4 slide of Bitcoin daily time frame. You can see that somewhere around here, PayPal announced that it's going to use Bitcoin as, excuse me, PayPal announced that it is going to use Bitcoin as a mean of financial transaction. It gave it a boost, and people weren't sure whether it's all or something else is going to happen. The confidence was such that you can see, like, really to the moon, with levels of profit taking, then jump again, profit taking. I think now we're going to be at the level of profit taking for some time. We're going to be on the level of about 18,000, I'm sorry. Then, of course, it will move, not of course, hopefully, it will move up again. I think I'm going to skip this couple of next slides because honestly, I mean, things are changing so fast in this business. These slides were prepared just 2 days ago on Tuesday. Today, they are already outdated. The only thing that I'm going to say is that the levels at which there will still be like support and resistance levels, they have shifted. As you can see, right now the support was around 13.5. Now we're going to probably have the resistance at about 18,000, as I said. And when Bitcoin breaks this level, sorry to say this again and again, to the moon. Okay, so a couple of things that make this currency, this asset, I mean, not only Bitcoin, but all basically cryptocurrency world, more the part of our daily life. We know, we trust people like, you know, the captains of high-tech industry, people whose name is associated with day-to-day product that we use, like Skype or Intercom. So these people know technical advances and technical prospects when they see them. And just this week, two captains of the industry, one the Skype co-founder and Intercom co-founder, announced that they're strongly on the Bitcoin bandwagon, and they are investing in it and probably are going to use it for their, excuse me, going to use it for their technical solutions. One thing that I mentioned, excuse me, now this is a serious issue. One thing that I mentioned before, and I'm going to mention it again, is that Bitcoin has all values, all signs of a real currency, except maybe for one. And this one is that it cannot be used right now as a mean of payment, not widely used as a mean of payment. Just imagine, like, you have dollar bill in your $100, whatever, in your pocket. You can go and buy a loaf of bread, you can buy a can of milk. If you have a few $1,000s, you can buy something else. You cannot do that easily with Bitcoin. Bitcoin is more like an asset that has its own value but cannot be used for payment yet, cryptocurrency at all. Like gold or real estate, your house, your car, your wedding ring, your engagement diamond ring. I mean, they all have values. You cannot take your engagement diamond ring and go buy another one. So far, this is what right now is like happening with Bitcoin as well, with cryptocurrency as well. But it's really changing. Last week, two major breakthroughs were in this field. One is the company called Shopping.io announced that it is going to, that it is going to use, to be a bridge, to be a link between people who are buying anything in major online shops and the customers. So we know that major companies like Amazon, eBay, Walmart, I mean, I'm going to name a lot of them, could name a lot of them, are not accepting cryptocurrency as payment. As of now, with the help of Shopping.io, would be able to make purchase in these online sites without converting your assets, crypto assets, into fiat currency. And this is on the personal level, sort of B2C. Then again, there is a major B2B question. Let's say you have a company, you calling your supplier, a new supplier, and you say, I want to buy 100 computers for my new branch. They say, great. Will you pay us in Bitcoin or any of the altcoins? And you say, I'm not set up for this. Well, now you are. The company BitPay just last week launched a service that will allow anybody convert fiat payment into crypto and vice versa. So these two developments are going to make cryptocurrency really, and of course, not only this, I'm sure there will be more of companies like that widespread in mass. But right now, it's these two major pioneers who are doing this, and they are going to make this bridge link between customers and business and between businesses. Every government, like every week, there comes a new information about new government, another country making cryptocurrency part of acceptable and legal in their regulation. Last week, one of the major markets in the world, Pakistan, Security and Exchange Commissions of Pakistan discussed the cryptocurrency regulation. They did not say that they will deal in cryptocurrency yet, but at least they said that they did not ban cryptocurrency use in the country. And that is probably the most important achievement of the last week on the government level. And I mentioned already last time, I think I did, that one of the main holders of Bitcoin in the world, of cryptocurrency and Bitcoin in the world, is FBI. FBI holds, I think, about 3 or 4% of all Bitcoins mined by today, and to the present time. And they seized it in different operations, raiding illegal companies. Let's not talk, it doesn't matter right now. And last week there was a new development, probably US becoming like major player in that field. US seized, the Department of Justice of US seized $1 billion in Bitcoin that was connected to the very, if not the most famous and most notorious darknet marketplace, Silk Road. Not enough time to talk about it in details. If you ask me a question, I will answer. But let's go into the main part of our meeting today, which is, of course, the ideas of trading. When you make a trade in the market, in the financial market, you base it on a certain set of your decision, a certain set of signs, indicators, signs, information. You do it by looking on the screen, by listening to the news, by reading about the company that is holding this particular asset. In our case, it could be a company that that organized a certain coin, certain token. So there are two ways to approach the analyzing. You have to make this analysis systematic. If it's not systematic, if you do one thing based on certain parameters once and then another next day on different parameters, you are not going to be successful. I can tell you for sure, you have to have strategy. The strategies are based on fundamental and technical analysis. Let's talk about fundamental analysis first, and I'm sure that many of you who are in this, who came to crypto world from Forex world, commodities or indices or stock market, know what I'm talking about. There is a very, very simple explanation, simple comparison, which actually I made myself. Everything else is like combined knowledge, but this one is myself. What is fundamental and technical analysis? Fundamental analysis tells you, gives you why the price of certain asset changes. Technical analysis tells you how it changes. Technical analysis is not in any way concerned with why the price of Bitcoin or Ethereum or whatever other or gold changes. Just tells you how, in the view, from the point of view of the particular indicators, how it's going to change. This is a major difference between technical and fundamental analysis. So fundamental analysis, what does it do? It analyzes the asset from the point of view of different inputs, political, economical, the company situation, how useful the, if we're talking about crypto, how useful the token of this particular company is. So this is how fundamental analysis establishes the real value of a particular asset. Like today, there are many people who say that based on their fundamental analysis, Bitcoin, for example, the real value of Bitcoin is way above what it is now. And people who believe in it, they invest in Bitcoin and waiting until next year it is going to reach 50,000. In the next couple of years after that, it's going to reach 100 or even more. Technical analysis is something different. It is a study of statistical trends. It's a collection of from historical data, from historical price and volume and other variations. And that gives you opportunity to trade. It gives you a prognosis. So technical analysis, what it does, it observes the patterns of price movements. And based on that, produces trading signals for you, for me, for everybody else, to go ahead and make the trade. And of course, technical analysis is only good when you have a lot of data. Let's consider, I mean, it's more or less clear with fundamental analysis. You analyze the company with accessible to you tools. You analyze the company and you say this asset should be so much and so much, like oil or gold or let's say stock price of a certain, of a particular company. Same with crypto. So with fundamental analysis, it's more or less clear. How does it work with technical? Why does it work? Well, it's very simple. First of all, it's psychological. Technical analysis says that our future is based on our past. And if a lot of people bought certain asset on a certain level, it means that this level is of some importance. And if, for example, just a small example, if the market price of an asset goes under this level, and the trader is in red zone, then when it goes up, many people would try to get rid of this particular asset and to be break even. It's just a small example of what I'm talking about. Also, what is extremely important, what does technical analysis do? It collects, as I already said, it collects data and it tries to find certain patterns, trying to find try to connect the movement of price, the change of price, to the previous behavior of a particular asset. And it's very simple in idea. It's very simple. If certain a particular asset, crypto or forex or stock, has done certain thing 100 times, it means it will probably on the 101st time, it will probably do the same. If it did it 10,000 times, 10,000 and first time, most likely it will do the same. There is no guarantee. I mean, you should remember, I have my favorite book. It's like a little bit of personal note. I mean, one of my favorite books is Hitchhiker's Guide to Galaxy. I'm sure many of you is familiar with the book, not with the movie. Movie is not as good as a book, I think. So in this book, there is a very, very good saying which refers to market more than to anything else. The thing that we thought was impossible turned out to be only very improbable. So, as I said, anything could happen in the market. If you think that something is impossible, think again. You think that it could not snow in July in New York or in London or in Tokyo or in Istanbul, think again, it can happen. The probability of that is very low. We're not going to go out on the street in Istanbul in July wearing our coats, but we should always know and should not be surprised if all of a sudden the sky is dark and the snowflakes are falling. So what is very, very important, the number of, there must be huge number of data in order to make the proper prognosis. The prognosis, the analysis, as I said, is very simple. You look at what was, and you find certain patterns in it, and you predict, I don't like the word predict, you make prognosis for what is going to happen. Sounds very simple. Believe me, this is incredibly complicated and involved and elaborated procedure. And Cubic Tech Technology is a team in Cubic Tech Technologies analyzing it, all these patterns from the point of view of mathematical, quantum technologies. Yeah, I'm sure you've heard about Fibonacci, you've heard about Heiken-Nash, you've heard about stochastic oscillator. All this is based on very, very elaborate mathematical analysis. So they're using it. Like, don't know why it works. I mean, no, I do. Maybe some of you do too. But it's like when you drive a car and you turn the wheel to the right, most of us have no idea. I don't. Most of us have no idea what happens inside the car, what makes it turn. But I know very well that if I want to turn right, I turn the wheel to the right. Same here. This is how you can use the technical analysis. Don't think why it's going to change the price, why the price is going to change. Just look at how it's going to change. Well, not too much time here. I'm going to mention one thing. Those who you also, I'm sure you all have seen, trends, resistance, and support. Trends are three different kinds. We're going to talk about them in more details, some in future. Could be sideways trend when the price of an asset sets in a certain corridor and is not going out significantly out of this flat corridor. Uptrend and downtrend. And very, very important, I already mentioned the word, I already said this word today, but now I'm going to not give a technical and precise definition of what it is, but sort of for you to understand what's going on at the resistance level and support level. It's written right here, and I cannot say it better than I wrote it. Level where an uptrend can be expected to pause or rebound indicates concentration of sellers, which means price goes up, but all of a sudden, a lot of people are going to sell. The price stops there. The rise of price stops there. And on the other side, on the other hand, level where downtrend can be expected to pause or rebound is the concentration of buyers. Price went down. Many people, many traders think, okay, perfect moment to jump into the market. And they jump into the market and the downfall of the price stops. This actually brings us to where maybe not such an important, but very logical consideration. I mean, what is first, chicken or the egg? I mean, does market behave in a certain way in technical analysis because it is predicted by technical analysis, or market behaves in such a way because many traders look at the indicators and decide to behave in a certain way. I mean, what's first, chicken or egg? I don't care about it. Honestly, I don't care. If I want sunny side up or over easy, I do X. If I want schnitzel, chicken schnitzel, I do chicken. I don't care what's first. I just use it. And I wish you do too, and I'm sure you will do. Okay, now we'll talk about what kinds of strategies could be employed. Not in details, we'll just go over several of them. What kind of strategies could be involved, could be employed in the cryptocurrency trading market. First of all, you have to understand, I mean, you know that, I'm sure more than I do, cryptocurrency market is very volatile. Change in price of 10, sometimes even 20% in one day, which is absolutely impossible in Forex or in stock market, or even in commodities, is, I mean, I not enough fingers on my both hands to count situations like this in the crypto world. So many people are scared. When you are scared, you press what's called the panic button, get out of the your trade. But if you are sure that you did the analysis, fundamental analysis correct, the market goes down, this should be not a sign for you to go out of the market. But you know what? It should be a sign of you to get into the market. And when you get low, buy low and sell high, this is when you make the highest profit. So there is a great opportunity in the downturn of the market, great opportunity. So please consider pressing the enter, close the trade button very, very cautiously. And that is actually also, I need to mention here, that is actually advantage of high frequency QBTech trading, trading, because it takes the mind out of trading. I mean, it puts a lot of mind in it in the beginning, but it takes emotions out of trading. And it's very, very hard. I mean, I know. I mean, if you look at the screen, you started with $100,000 in your account, and the market moves, and you are out of $20,000. You're down by $20,000. It's not good because it's $20,000. But if you believe that the market will go to 200, don't press exit button under any drawdown. That's important psychological note on trading. Okay, there are different kinds of strategies. I mean, you need to have strategy, as I already said. You do need to have strategy to trade. Absolutely. What is strategy is a set of actions aimed at creating profit in the cryptocurrency market. Very simple. Okay, it could be any kind. Strategy is based on fundamental, as I said, it's based on technical analysis, and is also based on your own approach to the market. It could be anything. I mean, you could tell yourself, I'm not going to trade on Fridays. Or you can tell yourself, I'm not going to trade after 6 o'clock at night. The reason doesn't matter. You could tell it to yourself, and if you hold it to that, this is your strategy. You know, on a funny side, on an amusing side, one of the first strategies that I came across many, many years ago, that was back in New York. I had a friend. I was a scientist at the time. So I was just looking at the market. I had a friend who was a trader, and he introduced me to his strategy of scalping. One of the small but very important for him notes for strategy of scalping. We'll talk about scalping a little bit later. Scalping is making quick in and out with not very significant profit. This guy would close all his positions when he would go to get a cup of tea or a sandwich, or if he went to the bathroom. He said, who knows what's going to happen in these 10 minutes that I'm not in my monitor. Actually, he taught me one, this is funny and amusing, but actually he taught me one more very, very important and very important tip, which I'm using until now. And that is, it is better, if you have an open trade, it's better to close it 1 day earlier than 1 minute later. If you are at the level that you think is already acceptable for you, level of profit, I mean, that you think is already acceptable to you, the thoughts of that the market can go even higher, you can make more profit. I'm not saying that you should do it. I personally put it aside and I close the trade as soon as the market reaches acceptable for myself profit. I'm not waiting if I am by computer. If I'm not by computer, I'm waiting. Most of my trades are closed at take profit. But if I am at, this is the name of the game to do. Trading strategies will not guarantee that you will make profit. I mean, it will most likely will, but it will definitely prevent you from making improper side and losing a lot of money. Now, let's talk about different strategies. First of all, the one that most beginner traders, and actually it's both sides of the spectrum, beginner traders and very elaborate traders, very experienced traders are using, very sophisticated traders, it's scalping. What is scalping is taking advantage of small market movements. You open a trade and you close it very, very quickly. Sometimes it's minutes, sometimes it's hours, usually not more than 1 day. And you take very, very small profits. And usually the profit size of your positive trade is about the same as loss side of your negative trades. What does it mean? It means that you have to have a lot more positive trades than negative. And many companies do this. Usually the high frequency trading is the name of the game. I mean, the quantum algorithms that Qubit technology offers, I mean, they should be on your computer, on your screen. They should be in your mind all the time, because this is one of the major fields where Qubit technology making great profits. What is our advantages? It's relatively safe. I mean, you cannot go down a lot. You cannot, just can't, because the size of your trades are not significant. It requires experience, though. You have to read the indicators, the like low level indicators, low time rather indicators. You have to be disciplined and you have to be patient. Now, this is not so much of a trading strategy, but this is more of a, I would say, investment strategies. And I already mentioned that you wait for the market to go down a bit or a lot. You buy on this as the market dips, and then you hold your investment until it reaches a level that you consider acceptable for yourself. The higher the drop, if you believe in the asset, the higher the drop, the more profit you will make. Advantages and disadvantages, of course. I mean, it does not require any specific trading software. You buy and you wait. You don't need to be on the millisecond or microsecond accuracy. Ideally, you open a trade and you forget. You go to sleep, you go to watch TV, you go out, doesn't matter. Just don't look at the screen too often. Disadvantages, no quick profit. This is a very long process, and you have to be able to do your fundamental analysis 100%. If you don't, you may be going down a little. But again, if you made the proper analysis, you will be, with this long-term investment, with this long-term trading, you will be positive. Now, there is a saying among beginners and not so beginners, trend is your friend, okay? What is a trend? We saw it with Bitcoin. I'm sure many of you, I mean, if not all of you, saw it in Forex, in stock market, in all other trading endeavors that you undertook. Trend is a change of, consistent change of the price. When I say consistent, it doesn't mean that it's increasing all the time or increasing all the time. No, of course it has ups and downs. But what it means, the upward trend is when the highs of the market movement are higher with time, and lows are higher as well. The downward trend is when the highs and lows are lower. Well, I hope you didn't get lost in this elaborate. I mean, so the market moves is not going up or down all the time. It goes in zigzags, but if it goes higher, you see it in the trend. So the advantage of such a approach is that you also don't need such an elaborate software, and it's not a very risk strategy. Okay, when the change in the trend is not in sight, you can relax and just take the profit. And in one of the following meetings, I will show you how to find the change in the trend, how to see the change in the trend based on technical indicators that I set up myself. And downsized, I mean, crypto is unpredictable. I mean, the trend could change in a matter of a few minutes or a few days or a few seconds sometimes. Well, not so much few seconds, I'm sorry. It can change. And even the fundamental analysis, if something happens, if something major happens, you will have to watch this thoroughly and all the time in order not to have, not to become a victim of sudden change in price direction. Okay, this is something that not too many people in trading are using, and this is something that I myself, I can tell you, is not so familiar with. This is not a trading strategy. This is more of a profit-making strategies. You need to understand how people make money in the crypto world. They either trade, as we know, as all of us do. They either trade and they buy low, sell high. They make money by buying and selling assets. There are other ways. There are ways of making money by supporting, by being technical in the market, by being part of the market. We all know about miners. I mean, miners are the people or companies or sometimes even countries that make money by producing coins, different coins. We'll not get into details of how it's done. We all know that. But then there is another a group of market participants who make money by helping the blockchain procedures or smart contract procedures to operate. This is called staking. If you set up a staking coins account, you need to have significant number of coins, significant volume of them. They will be part of the validation process of the blockchain procedure. Hope this is not too complicated. I mean, it's very simple. I put it in a very simple way. Your coins are helping the blockchain to work. And as you do this, as it is used, you get a portion of the benefits that blockchain produces. Advantage, you don't need to do anything. It doesn't require any maintenance. It doesn't go down the price of it. It does not depreciate its mining equipment. It does not require millions of kilowatts of electric power as mining. So you just put your coins into staking account and it does what it needs to do. You're still exposed to the market variation. That's a disadvantage. I mean, market fluctuation, if it goes down, it goes down. If it you lose part of your wallet, and that's it. You're not anymore the participant in the staking coin procedure. And also there is one thing that you can do. You can lend your crypto to a tokenized crypto fund, and that actually is, in some opinion, is maybe one of the good ways to proceed. And that means that you give your the decision making. You buy a coin that a crypto fund made, and this token or coin is changing in price depending on the results of trading of the fund, how successful they are. And usually, if you choose the right people, you will always make money with a coin like this because it will go up in price all the time. And something else, this is very seldom used. In some way, you can give your crypto to somebody to trade for you. This is like a managed account, just same as in Forex, same as in stock market, anywhere else in crypto, in trading financial markets. If you know someone who does things good and profitable, some great trader, give him your assets and he or she or it trades on it and making profit for you. Advantage, again, you don't need to know a lot. Disadvantage, if money or crypto is not in your wallet, it's not your crypto. Sorry to say this. I mean, even if it's relatively safe and you give it to somebody else, I mean, they're not prone to mistakes or bad will. And when your money is in somebody else's hand, it's not your money. That's my opinion. Okay, we are almost out. That's it. In the conclusion, I'm going to say, in times of panic, experienced investors come out on top. If you made your strategy correct, and if you have a cool head, it will produce profit for you during any market conditions. This is very, very, very important. If you have a strategy, follow it religiously. Don't listen to your heart. Don't listen to your brain. Don't listen to your friend. Follow your strategy. Different kinds of strategies, scalping, buying at the bottom, following the trend. I mean, they all are proven tools in traders' arsenal. And tokenized crypto funds are good. And they combine all the benefits of the different strategies. But the high frequency trading, which is used in scalping, is personally my favorite one when it's based on quantum algorithms given to you by quantum technologies, by qubit technologies. And it's very, very strong team. Thank you very much. Hope to see you next week. Next week, we'll talk about different kinds of price action, mostly about price action. And we'll talk about what happened in the world of crypto during this week. Thank you very much. Bye.